That some achieve great success is proof that all the others can achieve it as well. Abraham Lincoln. And President Lincoln again touts what we talk about on a daily basis, and that is continuing to believe in yourself, continuing to believe in the program, practicing 10 to 15 minutes each and every day the market is open. This is not a once a week for an hour or two. This is 10 to 15 minutes every day, practicing, learning, understanding how these markets move. Remember, it's all about price movement. It's all about trend following. It's not about forecasting. It's not about prognosticating. It's not about being smarter than the market, calling things before they happen. It's about following trends, weekly vertical crossovers, 2-day recrosses. It's simple yet effective. You guys who've been with us year after year after year, you've seen it over and over and over again. We want you to practice it. Use your trade worksheets, your daily market worksheets, weekly market worksheets. Where can you find them? In the show notes every day. They're PDFs right there. All the trainings that we put out every single day are available for free to you. You just need to go to chartingwealth.com, sign up, put in your name, email address, and we will email you our video that comes out every day the market is open, including this one, the weekly comprehensive review. You also get the daily reviews and you get the special trainings. Go to chartingwealth.com, put in your name, email address, you will get it. Patreon members, check your mail if you hadn't seen it already. We did a special training for you on the quarterly chart. The quarterly chart went out yesterday as promised at the end of course, the fourth quarter of 2019. Now, let's jump into these charts. What do we see happening on the S&P 500? Well, we see things down for the day. We'll talk a little bit more about the day as we get down to the 4-hour chart. But let's look at what happened over the course of this week with the price percent oscillator. You can see that we did reach a higher high during the week, a smaller candle. It just went above where things did the prior week, and the high was 324.89. 324.89 the prior week, the high 323.80. So it pushed a little bit higher. However, the derivative oscillators lost some momentum. Price percent oscillator also has gone a little flatter. It did go a little higher, but again, not a bigger green up candle, not pushing through the Bollinger Band, although the Bollinger Bands are continuing to push away from each other, showing volatility. But again, it's a green up candle, not as big as the prior week. So it's showing a little bit of slowdown. Look at this 2-day chart. Now, this latest 2-day candle represents Friday. So again, it's the first day of the latest 2-day candle, but look what it's done. It's fallen through the 2-day trend line, even if we connect it to the latest candle, and that would get us 3 candles, almost 4, that we've connected. We can see that price is right there, pushing through, just barely holding on to the 2-day trend. It is above the weekly, but look at that price percent oscillator. It is doing its best to get very, very close to crossing over, going down. Again, if you're still in that up trade, then of course you have done very, very well, Padawan. You know that crossed over on the 13th of December, and the jumping in point somewhere around 316.15, a high of 324.89. That is beautiful. And again, we'll just continue to watch, see what there is to see here, how that leads us, but things are weakening significantly. Again, always use your profit bands and your loss bands to help you decide where it is you want to go and why. And look at this latest chart, up big on Thursday, and then down big in the morning on Friday. A little bit of recovery in the afternoon, still down 0.75% for the day, not for the week. It was an up week. And we see that the price percent oscillator just didn't have enough energy to cross over. Derivative oscillator still negative. Price percent oscillator at the end of the day moving down. So again, weakening on the S&P. What do we see on the Qs? Of course, the Qs reached higher highs, not as big a candle as the prior week, but did go higher. Price percent oscillator still going up quite nicely. Lost maybe a little bit of energy. Derivative oscillator gaining upward momentum. So the Qs is stronger overall in its up movement. Look at this latest 2-day candle. Again, showing indecision, tending down just the first day, but that has pulled through. Even if well, it's sitting right there on the 2-day trend line, but it's really hard to get us a good 2-day trend line. We're not connecting but 2 candles. But anyway, showing weakness. Price is still above the weekly. Price percent oscillator heading down, but not as close to crossing over as on the S&P 500. And we see the derivative oscillator losing momentum. We go to that 4-hour chart. We see what happened on Friday. Got a red spinning top in the morning, bit of a recovery in the afternoon. Again, these are Heiken Hashi candlesticks. Overall down for the day 0.92%. Price percent oscillator pulling away there at the end of the day from the red signal line. Derivative oscillator gaining some momentum. So some weakness, but price still hovering above, just continuing to move up that 2-day trend line. So keep your powder dry. Pay attention. Remember, again, your profit and loss bands are in effect. Never hurts to take profits. Let the bigger charts guide you. Great training for you in the show notes today on the price percent oscillator, helping you understand what it's all about. It's a percentage version of the MACD, moving average convergence divergence indicator, and it's extra special. So I want you to take that training. You'll see it in your show notes. Spend 10 minutes or so this weekend going over that, taking notes, putting it into your trader's journal, your workbook, notebook, whatever it is you use to keep up with important nuggets you learn from your own training and from watching us every day. Let's go now to bonds. Bonds up big for the day, 1.53%. And what did that do for us as far as the week go? Well, it turned a red down candle into a green spinning top. Price percent oscillator is about flat. Derivative oscillator moving up after really 3 weeks of down movement. So again, hasn't crossed over going up on the weekly chart, but again, slowed down significantly in that down movement. First green candle we've seen this is in four prior weeks, was all either red spinning tops or red down candles. So we go from the weekly chart to the 2-day, and what do we see here representing Friday? A big green up candle, and look at that, it's pushing through the red signal line. Again, haven't finished drawing that candle. That'll happen at the close of the market on Monday, but it's a big green up candle, and again, showing you bonds are really responding to the down movement in stocks, or the opposite. Stocks are responding to the up move in bonds. Either way, typically bonds are a safer place for your money to go when the stock market's not doing too well, and didn't do too well on Friday. So we'll keep our eye on those things. When that occurs, then of course we will move our 2-day crossover over, and that will stop us from being able to engage in any down move on TLT. Now, if it's a down day on Monday, then it may very well pull back through this. Remember, we don't call a candle until it's drawn. Go to the 4-hour chart. What do we see there? Strong up movement in the morning, followed by strong up movement in the afternoon. Price both in the morning and the afternoon above those Bollinger Bands that are stretching out. Volatility bands. Price percent oscillator heading up. Derivative oscillator gaining lots of upward momentum. Lastly, we go to gold, which was up for the day quite nicely, 1.33%. Check it out. Didn't quite cross over, but the derivative oscillator's positive. How many of you went ahead and pulled the trigger to practice trade gold at the end of the day? Not a bad thing to practice. Remember, you have the weekend effect working for you. And again, keep your eye on things. If you jumped into it hopeful that gold was going to continue to move up, have your profit and loss bands set. So if indeed gold pulls back and doesn't keep moving up, just pull out of that trade, learn from it. Wait and see if at the end of the week it will be a clean crossover going up. Never hurts to practice, my friends. I encourage that all the time. That's why you keep a trader's notebook. That's why you have a trader's journal. That's why you write down on your trade worksheets everything you are learning so that you can go back and learn from what you've done in the past. There's nothing better than you learning. This is not something, it is as much science as it is art. We're dealing with complexity theory. And again, you've got to be bold. You've got to look at the rules, and you've got to know when those rules are working for you and when they're not. We do what works. That's what we do. So we see price percent oscillator getting very close to crossing over. Derivative oscillator already has done so. Big green up candle in gold. 4th week of up movement in gold. Go to that 2-day chart. Of course, the latest 2-day candle booming up large, pushing through the Bollinger Band, which is stretching out quite nicely. Remember, those are volatility bands. The further apart they are, the more volatility. When they start getting squeezed, you can typically expect something to pop. And on gold, it popped going back to the 24th and just started moving up. Derivative oscillator heading up, price percent oscillator heading up. Remember, candle isn't going to be drawn on the 2-day chart until the close of the market on Monday. What do we see on the 4-hour chart? Up movement in the morning, followed by a little more movement up in the afternoon. Price percent oscillator heading up. Derivative oscillator gaining momentum in the morning and the afternoon. So folks, that's where we are. I'm not going to be sending out a notice of a weekly vertical crossover because it is not official. It did not cleanly cross at the end of the week. But those of you who are paying attention to this broadcast, I want you to note in your traders' journals the possibility of you practice trading that. You have the weekend effect working for you. And again, that typically moves in the same direction on through Monday. If you haven't taken that training yet, I'll probably offer it again this next week. You really need to understand the Monday effect or the weekend effect. Very important. That's one reason our weekly vertical crossovers work so many times. And of course, that last 2-day recross worked so well on the S&P 500. That's where we are, folks. As we end the day, you hadn't purchased our book. I sent out a bunch yesterday. We also have a discount if you buy a year's supply. It's a good way to start your year of our traders' journals, which include the weekly market worksheet, daily market worksheet, and trade worksheets, all spiral bound in a 3-month edition. You buy 4 of those, and we give you quite a discount. We'll ship them to you. Follow the link in the show notes. You happen to live overseas and want a copy of our book, email me, cw@chartingwealth.com. I will send you an invoice. We'll send your book to you wherever you are in the world. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.